Hey MSTY Gang, welcome back to Mangosteen BTC. This episode is all-weather income with YieldMax. We're going to go into MSTY and Winter and how with the balancing of these two products you can achieve all-weather income and your 80% dividends no matter the market conditions. Mangosteen BTC is my channel's brand for how to make money. We cover investing, Bitcoin, Bitcoin treasury companies, Bitcoin standard investing, Bitcoin derivatives, and trading, my proprietary SMAX trading approach, a simple, powerfully profitable approach to Bitcoin. So for context, my last video that got a lot of interest from the MSTY Gang was my coverage of the Marcos Miller and Jay Pestrichelli interview that covered the true mechanics of exactly how YieldMax generates these amazing dividends. I'm going to link it in the description because it does provide a lot of context to how this episode will progress. As a bit of a recap, we covered the underlying mechanics of MSTY and heard it straight from YieldMax's mouth as to exactly how MSTY works and how it makes money. We also realized that you need to rebalance out of MSTY into Winter at the right time to ensure all-weather income. MSTY will not produce perfect dividends and maintain its capital value in all market conditions. And I covered some initial thoughts on how to approach this. You have a significant downside exposure. If you are bearish, you need to own Winter. And what we discovered in the previous video is that these are the payout profiles of MSTY and Winter given the price of Microstrategy. And what we can see is MSTY will generate its premium as long as MicroStrategy's price is generally trending upwards. If it's trending downwards, you will lose the value of MicroStrategy minus whatever income option premium that you receive. So if MicroStrategy goes down 25%, you might lose 23% if your option premium income is 2%. And again, with Winter will generate the option premium as long as the MicroStrategy price is going down. Now, the first thing that we know about MSTY is that it's a derivative of MicroStrategy, right? It's a product that sits upon MicroStrategy. And what we know of MicroStrategy is that it's a derivative product of Bitcoin. And we can see that when we compare the movements of Bitcoin and MicroStrategy since YieldMax's MSTY was launched, is we've had price appreciation in Bitcoin, but substantially more aggressive price appreciation in MicroStrategy, while at the same time sort of having a muted, more consistent price for MSTY. Now that we have the four items on a single graph, let's explore their underlying connected dynamics as Bitcoin to MicroStrategy and MicroStrategy to MSTY. So we know that MicroStrategy is essentially a leveraged play on Bitcoin. And so what we should expect over time is that MicroStrategy's price should move in line with Bitcoin's, but at a more amplified ratio depending on the amount of Bitcoin that they've purchased. And we can see that in the historical data. When we look at this graph and we measure the beta of MicroStrategy's return versus Bitcoin's return each year, it has subsequently grown to where it's at now, which is a little bit under 1.5. And we can look at this and say, well, MicroStrategy has clearly been leveraging their Bitcoin position up so that their exposure to Bitcoin is becoming higher and higher. And so when Bitcoin's price moves, it moves higher and faster than what Bitcoin does, such that if Bitcoin's price went up 10%, we would rightfully expect MicroStrategy's price today to increase by about 14.8 to 15%. We can visualize this market beta here. So here's the daily returns of MicroStrategy versus Bitcoin. And when we plot a straight line through it, we get this coefficient of 1.48, which represents that beta. Now you might see an R squared of 0.5, which is the explanatory power of that linear line versus this data at 0.5 and think that's kind of low, but trust me, in finance, that's considered quite high. We can see MSTY moves very, very closely to MicroStrategy, almost a perfect line with one big but. And that is this red line here where you can see these consistent periods of underperformance, these daily returns where for some reason MSTY just underperforms MicroStrategy. You might think, hey, that doesn't seem like that many dots, but I assure you that is enough to make your day really, really painful. And this underperformance is a reflection of that capping of your upside, which I'm going to show you in the next slide. So we can analyze this price movement that occurred between September and March. So September last year and March 2025 to get an appreciation of these market dynamics. So what we can see is we had Bitcoin go up about 83% through this time period. MicroStrategy goes up 311%. So that's that 1.48 to 1.5 multiplier compounding on itself to the point where MSTY's gone up nearly 4x Bitcoin because you've had 1.5 on 1.5 on 1.5 on 1.5. You suddenly get this really outstanding compounded return for MicroStrategy. It's really exciting, right? Now, in that same time period, MSTY does 145% gain, which is that sort of reflection of that capping of your upside. And then come December, when we have that decline, we start going down into that bottoming period at March, where I think Bitcoin hits around 76, 77K. We draw down 50% on MicroStrategy and about 50 to 60% on MSTY, right? So MSTY rides up at about half the pace of MicroStrategy, but then, you know, floors right down at the same rate or even faster than MicroStrategy on the way down, right? And that's a reflection of you capping that upside, but being exposed fully towards the downside. And this is the limitation of MSTY. Now, people have sort of thought, oh, this is fine because like I've generally, still have what I invested and I've earned some fantastic returns over the time. And that's true. But if a real bear market were to come, this dynamic would play out again just as aggressively. Bitcoin would have its 50 to 60% drawdown in a normal bear market. MicroStrategy would have a considerably higher drawdown, maybe 70 to 80 or even 90% drawdown. And MSTY would have the exact same bloodbath as MicroStrategy. And so what's going to happen in the next bear market? MSTY is going to experience an absolute bloodbath. Here you ask, how can I avoid this bloodbath? Well, winter is the new product on the block. And just as Jay said in his interview, winter is the inverse of MSTY. And we can see that winter has done exactly the opposite of MSTY. We can see in April we had this little blip downwards where just after winter's launch, we had a bit down on MSTY because we had this drawdown on MicroStrategy driven by this drawdown on BTC, and winter hedged it out, right? And then now that we've been in a positive uptrend, MSTY's maintained its capital, gone flat, while winter's taken a bit of a bath. Now, that's hinting to exactly what you need to do. So when you see a true drawdown on MicroStrategy driven by a drawdown of BTC, you want to own winter. Now, the hard part is figuring out when you should do that. So if we consider the options that we have to take positions in this market, we have really four main choices. We can be bullish MicroStrategy, in which case we take a long position on MSTY, or we're unsure, so we hold our cash in cash, which is a bit boring, and we only earn a very, very low interest rate, or we're bearish, in which case we hold winter. Now, I've had some comments, oh, should I just hold a 50-50 balanced portfolio and then I'm hedged? And it's like, no, because what this position represents is short volatility. So what you're saying is I'm going to take the most volatile financial product ever devised, and I'm going to short volatility. So you'll make income from both winter and MSTY, but you will start losing mega amounts of money the moment any movement occurs either way. So if it goes up, winter will lose money with MSTY capping out your returns, and vice versa. If you go down, winter will cap your returns while MSTY goes down forever. And so it's a very, very, very risky position, and you want to make a decision as to whether you think MicroStrategy is suddenly going to stop being volatile for some reason, which I don't think there's very much thesis for that. So I touched on the Bitcoin cycle theory a little bit in my previous video, where we have these periods of bullish activity, bearish activity, consolidation, bullish, bearish, consolidation, bullish, bearish, and then consolidation. Now, this is driven by the 4-year halvening cycle. So each of these yellow lines that you see here are the Bitcoin halvenings. Now, the Bitcoin halvenings are when the issuance rate of Bitcoin halves, and it generally creates a supply shock. So you can see Bitcoin halvening, supply shock, price goes up, then we get over exuberance, everyone gets too excited, and then we have it come back down, and it usually hits the 200-week moving average. They come back through a consolidation period, halvening occurs again, supply shock, everyone gets over exuberant, and then bam, and we enter a bear market. This time we had the worst bear market ever because we actually broke through the 200-week moving average for the first time, which is mostly thanks to incredibly high interest rates coinciding and syncing with the bear market in Bitcoin that occurs either way. And then we've had to pop back up, and we've come up, hit the 66, 65K bit into the halvening. We had a little bit of period of thing, and then we're coming in and we're starting to see the effects of that supply shock now. And so what do I expect? Well, in sometime October this year, we might see that peak of price. Could be a couple months either side. And then if the Bitcoin cycle repeats, then we could see a decline, and that could see itself going to something around the 200-week moving average. and then we'll recover from that, head back up into the consolidation zone and prepare ourselves for another halvening sometime in the first half of 2028. A simple way is to consider the weekly RSI. Now, the weekly RSI is great because when it gets overheated, you can see an opportunity to consider moving into winter. So when it's overheated, move into winter, take it to the bottom. Generally, when you get to very close to the oversold level, you can then bounce into MSTY and ride that back up, and that indicator will last you for years. Now, the problem that you do have is that you can generally, especially here, you can see yourself cutting yourself out of winter way too early, and here you would have cut yourself out of winter too early. Cut yourself out of MSTY too early, and then you'd be holding winter, and it'd be very, very unpleasant. Now, the really hard part is that you need to be on the right side of the trade, and you need to time this really perfectly. And so that's one of the limitations of using RSI. So this can be used in conjunction with other indicators, but I really like my sort of proprietary way, and of course I'm absolutely 100% biased, so you'll have to bear with me while I show you how I would approach it. So as I've discussed before, I have a proprietary SMAX trading system that you can see here, and I mentioned the SMAX bands component of it earlier. But it comes as a total proprietary trading algorithm. And what it does is it can tell you when to bounce in and out of MSTY and winter. Now, at the moment, it's optimized purely for trading futures. But if there's enough interest, I will code a special version for the MSTY community that will show you how to balance into MSTY and into winter at the right time so that you can build all-weather income. So here you can take a peek. So what you can do is when the SMAX system is saying buy, it's telling you to balance into MSTY. And when it's telling you to close your position, it's telling you to balance into winter. And so you can see here at this point, it was said, hey, you're entering in the green bands, you want to own MSTY. And you would have owned MSTY, written it up, and then it would have said, hey, we want you to close out. And you would have written owning winter down, and then you would have been back into MSTY, riding up, and then back into winter, and then into MSTY. Now, depending on the market conditions, this rebalancing can take, like if you look here, that's May to October, so it could take 6 months. And at other times, maybe it takes only a few weeks, but you kind of have to, so it is an active trade. But this, I think, is the best way that you can do it. It will tell you when you want to bounce into MSTY and winter. So here it's bouncing into MSTY. You ride that up, enjoy all those gains, hit the top, winter. Run down, and it's saying, hey, look, you need to balance into MSTY. Ride that up, boom, balance into winter. Ride that along into MSTY again. Boom, and you'd be up. And you would have avoided that massive drawdown that we had during December to March, which is this period here. And you would have compounded your returns because you would have made positive gains on your MSTY through this period and enjoyed the dividend income, and then you would have come down and enjoyed the dividend incomes of winter while enjoying the price appreciation of winter, and then you'd be back in MSTY here, riding that up, laughing off into the sunshine, all-weather income solved. Amazing. So by virtue of SMAX currently being optimized for trade Bitcoin futures, it's not currently set up ideally for rebalancing between MSTY and winter. But I am really interested to gauge the interest of the audience in owning something that would allow you to do that rebalancing and not have to think about it too much and maintain that 80% dividend yield, lock in that retirement income through active management. And I'll offer a 50% discount code to all the viewers. If you buy using that discount code, I will make available MSTY Winter Rebalancing Tool for free when I do release it in the next week or two. So I'll develop a MSTY custom balancing indicator, heavily based upon SMAX, a lot of IP from 9 years of developing the SMAX strategy. It'll be a simple own MSTY, own winter signal. I might throw in a little bit of own cash depending on what makes sense, and it will work complementary to the Bitcoin cycles and the traditional SMAX trading strategy. And as I mentioned, I'll give you a 50% discount, and if you buy the SMAX strategy, you will get this custom indicator for free when I do release it in the next week or two. I'll leave the discount code available for the next week. And final disclaimer, this channel does not provide financial advice or any advice of any kind. You must do your own research. Any investment or trading decisions you make are your own. This is entertainment only, and you are listening to a random Mangosteen on the internet. And finally, I hope you've enjoyed this episode. Thank you again for listening. You can find me on X, YouTube, or my website, mangosteen.global. If you have any questions, I do answer my comments, so engage with me there, or flick me a message on X, and I'll happily answer any questions that you have. Cheers. Thanks, guys. Bye.